Good afternoon. You're watching the Monday edition of Market View right here on Eswatini TV. My name is Notilisi Tole, and I'll have you know the team and I are glad to give you front row access to everything shaping the business landscape today. On the program, we are, of course, going to have our business news, and then later we're also going to hear from the Central Bank Governor, Dr. Philip Mnisi, who was actually a part of the launch of the Cybersecurity Awareness Month. To kick off the show, our business stories this afternoon. In our business stories, we begin with this. The European Union has reaffirmed its commitment to skills development as a strategic response to addressing unemployment. This was highlighted by Ambassador Carsten Mecklenburg during the second Eswatini European Union Partnership Agreement dialogue held at the Royal Villas. The event was officially opened by the Minister for Foreign Affairs, Honorable Polile Shakantu.
This dialogue, held in the spirit of cordiality and constructive engagement, signifies our enduring relationship, and it is one of our key tools for development as it strengthens and deepens our partnership for the mutual benefit of both parties. Our discussions here today enable us to collaborate on key priority areas such as international affairs, political and legislative matters, and human rights. We will also delve into critical aspects of investment, development, cooperation, along with pressing issues on climate change. Our agenda is comprehensive, covering a wide range of topics aimed at fostering cooperation and addressing key challenges. Our focus aligns perfectly well with Eswatini's national development priorities, aiming to foster a resilient and prosperous future for all our citizens.
European Union Ambassador Carsten Mecklenburg has affirmed the EU's continued commitment to supporting Eswatini, noting that significant progress has already been made across various sectors.
We have done a lot in the primary education, advancing the agenda, having every child access to primary education. We have achieved a lot together in supporting also community-based agriculture, the sugar industry, developing both the flagship industry players, but also supporting cooperative farmers. We have achieved a lot also. We have contributed to development of health sectors in the energy. So this is really a positive record that we can be glad looking together at. Now, our flagship support is on skills development. It's to answer to the challenges of the future. We will talk about it in our dialogue. Economic growth is there in the country, but it doesn't translate to everybody's wealth. So some of the citizens don't see the advancement of the economic growth in their pockets. The government is putting the right priorities, and we are there to support you.
Last year, the European Union reported that trade between Eswatini and the EU member states was projected to exceed 1.9 billion emalangeni. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
And that's your business brief. Stay tuned. Market View continues after the break.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back. You are still watching Market View. On to this now. As Eswatini launches the Cybersecurity Awareness Month, the Central Bank of Eswatini Governor, Dr. Philip Mnisi, has outlined what the bank is doing to ensure secure financial systems in the country. The governor made his speech at an event held at the Happy Valley in Eswatini, where he said the central bank is in the process of establishing a cybersecurity incident response team. Let's have a listen.
Over the past decade, digital transformation has changed how people conduct financial transactions, shifting from in-person banking to the use of mobile devices. Various innovations have led to faster payment processes. For instance, Your Excellency, the Eswatini payment switch, developed and launched by the central bank later last year, enables instant, low-value, inclusive payments between participating institutions. These changes have positively impacted financial inclusion and economic activity in Eswatini. Yet, the same digital technologies that bring efficiency and access have also made banks prime targets for cyber criminals and cyber attacks. Our licensed banks have not been spared. Some have experienced cyber breaches. We are also aware of fraudulent schemes such as facata scams targeting our customers. Cybercrime within the banking sector results not only significant financial losses, but also substantial recovery expenses and potential systemic risk that may disrupt payment systems and erode market confidence. Your Excellency, most importantly, loss of trust in digital security threatens the stability of the entire financial system, making cybersecurity as essential as managing liquidity and capital in the banking ecosystem. Let me turn to the role of the central bank, which is responsible for maintaining financial stability and ensuring the integrity of the financial system. Cyber resilience is an essential element of this responsibility. In recent years, we have issued guidelines on cybersecurity and cloud computing to provide minimum standards for financial institutions. We continue to strengthen our supervisory frameworks, ensuring that banks and fintechs adopt risk-based approaches to managing cyber threats. There is another program, Your Excellency, which we call the Regulatory Sandbox. That is where some fintechs approach the central bank to try out some few technologies. We put them in this safe environment, and once we are sure, we then release them to participate in the payment and in the financial system. Having a brief conversation with the CEO, I have committed that going forward, before we release this fintech into the financial system, we shall collaborate and seek the opinion of ISICOM to ensure that we are more safer in the financial system. We are also envisaging the establishment of a financial sector cybersecurity incident response team. A benchmarking visit by CBE to a peer central bank with a functioning financial sector security operations center has recently been completed. The lesson learned there, Your Excellency, in terms of regulatory frameworks and operational models, will guide us as we move swiftly to operationalize a financial sector CSIRT. Our major advantage, or the major advantage we saw, is that they have in their Cybersecurity Act, they have a Cybersecurity Act, which was passed by Parliament, explicitly designating the central bank as the financial sector CSIRT. Hence, they had the legitimate power to execute their plans, which are collaborated with their cyber security agency. We foresee and may propose a similar approach, Your Excellency, depending more on our cybersecurity laws to achieve the same result as we work in partnership with ICICOM. This month is not for banks alone. It is for everyone, including government agencies, businesses, schools, communities, and citizens. Cybersecurity is not only about complex systems. It is also about adopting simple daily habits, such as using strong passwords, being vigilant against suspicious emails, regularly updating software, protecting personal data, and reporting incidents promptly. To our banks and financial institutions, I call upon you to continue investing in cybersecurity, embedding resilience into every aspect of your operations. To our employees, I urge you to remain vigilant, to report incidents without fear, and to treat cybersecurity as part of your professional duty. To our customers and the public, you too are guardians of trust. By practicing safe digital habits, you safeguard not only your own finances, but also the stability of our financial system. Cybersecurity is no longer optional. It is essential. It is the foundation of digital trust, financial inclusion, and sustainable growth. As the central bank, we reaffirm our commitment to leading and supporting this effort. But we cannot do it alone. Every institution, every professional, and every citizen must play their part. Let us work together to secure trust, to build resilience, and to ensure that our financial system remains strong and stable in the face of an evolving cyber threat.
Right, and we've just heard there from Central Bank of Eswatini Governor Dr. Philip Mnisi sharing insights on what the bank is doing to ensure secure financial systems in the country. He was making his address during the official launch of October as the Cybersecurity Awareness Month. This is Market View. Stay with us. After this, I'm in conversation with economist Sanele Sibia.
Hi, I'm Alex. Let's talk about banks, specifically central banks. Believe it or not, they're really important to our everyday lives. Central banks manage the flow of money in a country's economy, so things don't go haywire. They're typically part of the government, although they should operate independently. The specific roles of central banks vary from country to country, but they usually have a few key responsibilities. Mainly, they're in charge of monetary policy to keep prices stable. One way they do this is through what's called the interest rate, which is the cost of borrowing money. Central banks lower interest rates, making credit cheap to boost the economy. Because when credit to buy things, such as homes, food, and cars gets cheaper, people tend to buy more. And who doesn't love that? But when prices get too high, central banks can raise rates, making money more expensive to borrow. This can slow growth, but it also brings down prices. Central banks also buy and sell foreign currency. They can do this to weaken or support the value of their own currency. Stability isn't just about keeping prices steady. That's why central banks also play a key role in preserving financial stability. For example, if a commercial bank is in trouble, a central bank can give them a loan, but only as a last resort. Central banks have been using all of these tools to help keep things stable for hundreds of years. Okay, so why am I telling you this? Well, whether you're buying bread or a pomegranate or even starting a business, that stability is important for all of us. And here at the IMF, a big part of our job is providing policy advice that can help central banks all over the world meet their price and financial stability goals.
Welcome back. Now you're still watching Market View. Now for our market analysis segment, we're going to start here. The recent International Monetary Fund report states that Eswatini's economy grew by 2.8% in 2024, driven by the manufacturing and services sectors, while severe drought conditions stagnated agricultural output. Now the country continues to face urgent challenges, including infrastructure gaps, high unemployment, and especially among youth, and significant income inequality. What does this economic shift mean for Eswatini? Economist analyst Sibia joins me in studio now. Very good afternoon to you, Mr. Sibia, and thank you so much for your time. As well indicated by the report, our economy grew by 2.8% last year. What does this signal about our economic resilience and vulnerability to climate shocks?
Thank you, Notile, and good afternoon to the viewers. So what we're looking at there, Notile, is a situation where the economy of Eswatini is actually growing at 2.8%, levels below what you would expect for a lower middle income country. We should be there at around 5%, and that's what we need to be somehow hitting and maintaining, so that would be able to have an economy that grows and creates that jobs. We need to invest in chipping away that 34% overall and 58% amongst youth in terms of unemployment. And also what it signals is, we still have an economy that, in as much as when you compare it with our comparator countries in the region, it does show signs of being a well-diversified economy. But what we need is to diversify it further so that, when we have shocks in one sector, overall the economy continues to grow and maintain that 4% that we saw earlier on in 2023. And I mean, this year we're also expecting to hit somewhere around the 5 to 7%. So that's where we should be on average, instead of going down to the 2.8%. Now that's what you'd expect for developed countries, not for a developed lower middle income country.
Right. As per the report, SACCO revenues are expected to decline significantly. Public debt is moderate, but, fiscal pressures are increasing. With the fiscal deficit at 1.3% of GDP, how sustainable, are the government's medium or long-term plans to, in some way, consolidate fiscal position and keep public debt at least around 40%?
I think what the report points to, Notile, which is quite poignant at this point in time, is in as much as Eswatini is actually at that threshold, as per the report, we were at just below 40%. I mean, considering that we've just recently had the IMF loan paid off. So at just at 40%, but still it highlights, severe pressures in terms of debt servicing costs, because in as much as we are below the 40%, but what we are seeing here is, the debt servicing cost, if you compare with that of 2011 to 2014, you will realize that our public debt has actually doubled. So now that means what you have here is a situation where government has to continue doing what they have to do in terms of the fiscal, obligations, while at the same time growing the economy. And what the report notes is quite important. It's what we need to focus on as a country, in the sense that we are an economy that is highly vulnerable to external shocks. One of those shocks being the SACCO receipts. Our greatest strength is also our greatest weakness as a country. We do get a lot of financing coming in through SACCO, but what we then find ourselves in is a position where it's a bit difficult to manage our government finances when the SACCO receipts decline. And the report does point to a situation where in the next 2 years we should expect to see those receipts declining considerably. Right now we are looking at SACCO receipts sitting around, I think, 3.9% of GDP, something which is historical. We've always we are trying as a country to reduce our over-reliance on SACCO receipts, but what we need to be able to balance is our debt against what we need to be doing as a country, make sure that we do put some actual and deliberate action towards fiscal consolidation, which is something that we are doing. But I mean, I'm reminded one day of another World Bank report when they were launching it. The World Bank also noted that Eswatini seems to tighten the belt when conditions are tough. But when SACCO receipts rebound, we start seeing just another growth in public expenditures, which is one thing that we need to try and curtail and make sure that our public expenditure grows with our domestically mobilized taxes. That's what we need to ensure that we do as a country. When we invest in infrastructure, we need to invest in infrastructure that's going to unlock growth. When we invest in certain areas, I think that's what we need to focus our borrowing on in the next couple of years, so that we really just unlock that which is locked in this economy and you get it growing to that 5% and sustainably. So it gets sustainable at that level through a productive economy, not through external borrowing every year. What you need is to unlock productivity in the economy, get the labor to be productive, and you get industry to be productive as well, so that we sustain growth through that.
As you break it down for us, Sbia, the report continues to note that banks are well capitalized, but non-performing loans remain elevated. Does this in any way pose threats or risk, especially in our financial sectors? And what do you think are some of the strategies that could be adopted to strengthen financial stability?
So when you look at the NPL loan book from the financial institutions, it speaks a couple of stories, the way I look at it anecdotally. It speaks an issue of an economy that has a consumer who is under pressure, right? And it also speaks to an economy that deals with external forces that it cannot contain, even from the business side, where there is a bit of that pressure coming in through from businesses, therefore propping up that NPL ledger by the banks. So what we are seeing happening right now is, even when conditions are permitting, in terms of you'd expect banks to give out more loans, but because there is this growing NPL ledger, what then banks end up doing is they end up being a bit risk averse, because what that NPL ledger says is, in as much as the macroeconomic conditions are permitting, probably the microeconomic conditions are not as ripe as we thought they were, right? Because you do expect that with the interest rate at this level, you'd expect to see much more of an increase. But that increase shouldn't come with also an increase in NPL loan ledger. So what we need to do as a country is, number one, we need to find ways of making sure that wages are actually catching up with the cost of living cost. That's indicative of the fact that there is a bit of pressure, cost of living pressure on the households. And then also what we need to do is to unlock growth from business, make sure that, for example, if we say 2 billion is going to pay areas from government to private sector, that's the money that needs to go in to pay those areas, so that you chip away at that NPL portfolio, because these are the businesses and people who are owing the banks, and if you can just release that liquidity to them very fast, it somehow also jumpstarts the economy. That's what we need to be focusing on as well, and also ensure that we ensure that there is prudent lending by the financial institutions, so that in a way right now you try to limit the risks and minimize them as much as you possibly can.
Right, Eswatini, thank you so much for that. With just about 6 minutes to go, could you kindly fill us in on the numbers now, the market analysis segment? What's actually making the trade today?
Thank you, Notsile. So when we are looking at the numbers, we're seeing a bit of, positive positive sentiments coming through from Wall Street. If you look at what is happening in the US, you see the numbers, they're all in the green. With the Nasdaq Composite Index, just slightly losing a bit of ground. Dow Jones Industrial Average gaining some 238 points, and the S&P 500 gaining some 44 points. So what's happening there is the government shutdown that's on the table, but business seems to be not looking into that much. We've had shutdowns before. As long as it be kept minimum, we expect for markets to start reacting to it if we were to see it going into next week or maybe later into the week. But right now, markets are just looking at what markets are doing. And what we are seeing, the news coming out, is AMD and OpenAI have actually signed this agreement. So now that somehow sparked some light into the artificial intelligence landscape. So that's what we are seeing happening within the US markets. Moving across to Europe, what we're seeing there is a bit of submerged activity within France only. That's purely because we know that France is in this somewhat of a transition, from the other PM to now the new PM. And there is a lot of talks about the debt within how France is going to manage its public debt going forward, and that's what drives markets quite a lot. But we're also seeing a bit of movements coming through from the political front, where we do expect Europe to start propping into those defense stocks. So what we're seeing now in London and also in Germany is there is a bit of that optimism around the AI stocks being driven by that AMD merger, and also the OpenAI, and also we've seen just some very big financial institutions coming up with the merger. So also that drives markets, showing that in as much as there is a bit of issues in the political front in the US, but markets remain resolute and quite positive. Moving into Asia, again, there is a bit of, we're seeing a lot of optimism there in Asia, driven largely by, the gains that the tech stocks are making. We are seeing the Nikkei there, just going to 47,000. That's an all-time high. That's largely driven by the fact that, markets have found a bit of stability around the tariffs, even though there are new tariffs that keep coming. But right now, markets are quite stable where they are. And also that merger between OpenAI and AMD somehow breathes life back into those tech stocks, and we're seeing the Japanese benefiting off of that, just with a bit of an offset in Hong Kong. But again, remember, we had all-time highs back to those pre-COVID levels. We're just at 27,000 last week Friday. And then in mainland China, we're seeing, the mainland seems to be going for that, that 4,000 mark. But that's largely driven by the fact that we have some strong economic stimulus coming through from China, and also the fact that the trade war seems to be diffusing. And in whatever way, shape or form you look at it, it seems the trade war, somehow China always had a response for what the US was going to do. So there is a bit of that calming markets. And then coming into South Africa, we're seeing another record in the Johannesburg Stock Exchange at that 110,000 mark. So that's largely driven by the price of gold. The miners, the minerals are moving forward. And also what we're seeing is that optimism towards the US markets, also that, potential extension of AGOA with firms in the US, just, absorbing the shock for the short term, saying into the next month we can absorb this additional cost. So we have somewhat of an access into that market until we see new, if we see the renewal or non-renewal of AGOA. But the miners and the financials are really just pulling up the Johannesburg Stock Exchange domestically. We've not seen any changes in the Eswatini Stock Exchange. Into commodities, what we are seeing there is an interesting story that gold seems to be going for that 4,000 mark. And with this government shutdown, if it is not resolved within today or tomorrow, we will see gold getting to that 4,000 mark. And that's actually good for the Johannesburg Stock Exchange. Brent crude oil, given the overall performance of the economy, we're seeing Brent crude oil stabilizing around 65, but, showing some signs of an uptick, because we are seeing that this subdued demand that we expected is not going to be that much. And then in terms of currencies, we're seeing some relative strength, relative weakness of the Lilangeni against the Japanese yen, and also some strength against the US dollar and also the euro. That's largely driven by, the metals. Metals are doing very well, and that tends to bode well for South Africa. And also we're seeing, we're getting a bit of strength against the Japanese yen as well. Thank you.
Sanele, thank you very much for your time. Economist Sanele Sibia helping us make sense of what's making the day's trade, and also helped us break down a recent IMF report on Eswatini's economic growth prospects. Otherwise, this has been the Monday edition of Market View from myself and the team. Until next time, take care.